Hey guys, welcome to the 10X Academy. This is your host JR, and in today's video, I'll be discussing Graham Stephan's video titled How I Bought a Tesla for $78 per month, and how you too can own a Tesla Model 3 for a similar monthly payment if you own a business and can deduct the purchase for the business use of the vehicle. As mentioned previously, this video I'll be discussing is from Graham Stephan's two videos titled How I Bought a Tesla for $78 per month and The Truth About My $78 per month Tesla. In his video, Graham clearly states that his monthly bill from Tesla is still $640 per month. However, with all the tax credits, depreciation write-offs, as well as business tax write-offs benefits, his monthly bill is drastically reduced to $78 per month for the first year, and then much lower thereafter for the next 4 consecutive years. After watching these videos, I felt the need to talk about tax deductions and incentives business owners have in reducing costs of expenditures for business-related items, and how those who are business owners can use these benefits to their advantage to, for example, get a $40,000 Tesla for $78 per month during the first year, and further reduce their payments thereafter if they can write off the expense as a business expense and take all the proper steps while doing so. I hope this video serves as a lesson on the advantages of owning your own business, as well as tax benefits from owning a business and the power of leveraging among other advantages. I will now go over all the tax benefits business owners can take advantage for business expenditures. Tax depreciation is a depreciation that can be listed as an expense on a tax return for a given reporting period under the applicable tax laws. It is used to reduce the amount of taxable income reported by a business. Depreciation is the gradual charging to expense of a fixed asset's cost over its useful life. There are many types of depreciation, but for this example, we are using a straight line depreciation for a vehicle business expense, which is 5 years of allowed depreciation. For the first tax year, the purchase of the car, exclusively used for business purposes, can be depreciated. And in fact, it could be depreciated for an additional 4 years. Since the vehicle cost basis was $40,000, Graham was able to depreciate approximately $8,000 for the first year. And of course, for the next subsequent 4 years, he will enjoy a yearly depreciation of $8,000 per year. So far, we have a $8,000 tax write-off per year. Interest paid on business loans are deductible as business expenses. Since Graham took out a business loan for the car and pays interest off that loan, that interest is completely tax deductible. Graham pays $1,165 a year in interest based on his loan interest rate, which was 3.75%. So the entire $1,165 is tax deductible every single year as long as he continues to use his car for business purposes. So far, we have the tax total write-off of $8,000 plus $1,165, which equals $9,165 per year. Based on Graham's income tax bracket, that comes out to approximately $3,095 of savings each tax year. That's as good as a check from Uncle Sam each and every year for that amount. So the car payment, as we mentioned, is $640 per month times 12 months equals $7,680 per year. The tax savings net payment is then $6,680 minus $3,095 of tax benefits, and that equals $4,585 per year, or $382 per month. So we've already reduced the monthly payment by 40%. Now, since Graham pays about $100 per month in interest, the rest of the $540 each month goes toward paying principal. So he's effectively paying $382 per month and getting $540 worth of principal each month going toward an asset. But wait, there's more. Now, for the first year calculation of the vehicle, the effective monthly payment is even lower than $382 per month. Due to additional tax incentives for electrical vehicles, this amount is much lower. First off, there is a $3,750 federal tax credit for purchases of electrical vehicles. There's also a state electrical vehicle rebate for California of $2,500. So that's an additional tax savings in the first year of $6,250. Now let's calculate the total cost savings and the effective monthly payment for the Tesla during the first year. So we have interest paid toward the first year of the loan, which is $1,438. We have the total out-of-pocket expense due at purchase, which included the taxes, license and registration, which are all tax deductible by the way. That total was $4,437. We also have the first year depreciation of the car, which we said was $8,000. So the total tax write-off amount is equal to $14,075, which turns out to be $4,926 in tax savings based on Graham's income tax bracket. So the first year total cost for the Tesla is $640, which is the monthly loan amount payment, times 12, plus $4,437 of out-of-pocket expenses. That equals $12,117 for the first year. Now we subtract $6,250 for the electrical vehicle rebates, both federal and state, and we get $12,117 minus $6,250 equals $5,867. Finally, we subtract the additional tax write-offs from interest of the loan, taxes, license and registration, first year depreciation, and we get $5,867 minus $4,926, which equals $941 for the entire year. This is the cost for the car for the entire first year. Divide that by 12 and you get $78 per month for a brand new Tesla. This is how, by using tax laws and benefits, in addition to making wise decisions on how to finance a car, plus the pros and cons for the different ways to purchase a business asset, and analyzing opportunity costs, one can make smart decisions and turn a normal depreciating asset into an appreciating asset with minimal money down and minimizing risk of investment. And why didn't Graham pay for the car in cash? Because with that money, he can reinvest that into an investment that is in the long run, through capital appreciation and reinvesting and compounding his returns, he can get a much better rate of return than the 3.75% interest he is paying for the loan of the Tesla. This is the power of leveraging, and how to use leveraging to one's advantage to make even more money while minimizing risk and costs. And for those of you that were wondering, yes, this video was brought to you by Tesla. I'm just joking, guys. But really, this video was meant to be a case study on tax deductions and write-offs for business owners, and how business owners can deduct items as business expenses and the different benefits and tax advantages business owners have when doing so. Thank you for watching this video. Make sure you hit the subscribe button and notification bell if you enjoy watching videos like this. And don't forget to smash that like.